Sometimes the simple answer is the right one in investing, and I think that's the case with artificial intelligence. One of the things I've been saying over and over on this channel is instead of trying to pick the winners in AI, whether you're talking about the companies that are making applications or making chips or building data centers, just pick the company that is making all the chips. That is Taiwan Semiconductor. Whether you think NVIDIA is going to win the market, whether you think Meta is going to eventually make their own chips, or Microsoft is going to make chips, or Amazon is going to make their own custom chips, or AMD, all of these companies are using Taiwan Semiconductor as their fabricator of most of these really high-end chips. That has given the company a phenomenal position in the market. They have incredible margins, and the valuation has gotten a little bit higher over the past year because the stock has gone up. But this is, I think, still the best positioned company in artificial intelligence because of the fabrication facilities that they have in the ground that no one else can seem to catch up to. So I want to dig through the numbers for Taiwan Semiconductor today and just go through how profitable this business is. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go through a few charts that just show how incredible Taiwan Semiconductor's business is right now. This is a look at Taiwan Semiconductor's revenue, gross profit, and net income over the past decade. And you can see here the company has a compound annual growth rate of 12.2% on the revenue side, gross profit up 11.1% annually, and net income has increased 13.8% on a compound basis. But look at the comparison of the orange column to the red column. That is net income to revenue. And if you go back to 2022, that margin was approaching 50%. So an incredibly high net income to revenue margin. That dropped a little bit in the most recent year. And that's in part because of some of the investment that they've needed to make to build the 3 nanometer process that they're starting to roll out now. There were some issues with some of that process, but ultimately now, especially with Apple leading the way with their M4 chip, that appears to be on track. So just an incredibly profitable company that is at the heart of all of these fabless companies. The reason that Apple and NVIDIA and AMD can be fabless chip makers is because there's a company that has the fabs, and that company is Taiwan Semiconductor. The next chart I want to look at is return on invested capital. That is the red line, and the blue is return on assets. Assets is going to include everything that's on the balance sheet, so it's a little bit more of a diluted number. But the red line is going to be the invested capital. So basically the capital expenditures that Taiwan Semiconductor is making, and what is the return or the net income that you generate for that. And if you can generate a return on invested capital in excess of 20% for a long period of time, that's going to result in phenomenal returns for investors. That's exactly what you see for Taiwan Semiconductor. You can see that the numbers are a little bit volatile over time, and they've actually come down a little bit. But I think one of the reasons that the stock has done so well recently is we're starting to see growth really pick up on a forward-looking basis as people are going to be updating more smartphones, more AI build-out is happening, and there's more and more companies getting into particularly the AI market. This is, remember, a market that was dominated by NVIDIA over the past couple of years, but there should be many, many more suppliers than that long-term. And ultimately, it's probably Taiwan Semiconductor that's going to be making a lot of those chips. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So why is it that a company like Taiwan Semiconductor is probably a better way to play the AI market than just buying a stock like NVIDIA? Well, let's look at valuation. Right now, Taiwan Semiconductor stock is trading for 25 times trailing earnings and about 20 times forward earnings. NVIDIA, on the other hand, trading for nearly 80 times trailing earnings and 37 times forward earnings. So NVIDIA is a much more expensive stock. But what's happening in the AI market is NVIDIA is supplying most of their chips to just a handful of companies. The hyperscalers is what we call them. So Meta is buying a ton of their chips. Microsoft is buying a ton of their chips. There are some other startups, some of them actually funded by NVIDIA, who are also spending billions of dollars on chips. What are those companies, those hyperscalers, also doing? They are also designing their own artificial intelligence chips. If you are Mark Zuckerberg at Meta, and you're saying, I'm going to spend $40 billion on capital expenditures, and a huge chunk of that is going to go to NVIDIA to buy chips, you are now beholden to Jensen Huang and however he wants to price those chips. So one of the things you're going to do is you're going to say, hey, can I make a chip that is going to be 50% as good, maybe 50% as efficient? It doesn't need to be the exact same chip as the H100 or whatever chips they are buying today. It just needs to be a better total cost of ownership. And so that's ultimately what all of these companies are investing in, is building out the AI capability in-house to be able to design their own chips. And long term, what that's going to do is it's going to expand the market for a company like Taiwan Semiconductor, who's going to be fabbing those chips, whether they're NVIDIA chips, Meta chips, Microsoft chips. Anybody building an AI chip is probably going to be building it on a Taiwan Semiconductor fabrication facility. The other thing that we're seeing is a lot of this artificial intelligence inference is starting to move on device. So Qualcomm's chips are starting to do this. There are plenty of rumors that Apple is also going to do this for some of their lower end models. Those are going to move on device. Who is making all of those chips? Taiwan Semiconductor, again, is making a vast majority of those chips. So for the past year and a half, 2 years, NVIDIA has been really the best way to play artificial intelligence because it was kind of the only game in town. But I think that's going to shift over the next 2, 3, 4 years as a lot of these huge customers of NVIDIA start to develop their own chips, start to say, we can't be reliant on NVIDIA for our chips long term. We need to do our own designs and fabricate those ourselves. At the same time, a lot of that inference that has always been done in the cloud is moving to on device. Models are getting better, they're getting more efficient, they're getting smaller. That's going to move more and more of this artificial intelligence models onto devices, and that means there's going to be more demand for AI chips that are actually mobile chips. So you have an industry that's potentially going from being dominated by one company, NVIDIA, to that data center business being distributed amongst more companies at least. Maybe that's Meta, maybe that's AMD, maybe it's Intel, but there's going to be more players involved in the data center AI business in 5 years from now than there are today. The other thing is that not all of this inference is going to happen in the cloud. It's going to happen more and more on device. So that's going to be a new line of chips. That takes a while to develop those chips, and we're not even at the point where we're really launching those at scale yet. We're maybe going to see that later in 2024, but you look out to 2025, 2026, all of these companies are going to be building hardware that is going to have inference on the device. All of this means that there are tailwinds behind Taiwan Semiconductor and potentially headwinds for leaders like NVIDIA in the artificial intelligence space. Combine that with a better valuation for Taiwan Semiconductor than you get with a company like NVIDIA. I still think Taiwan Semiconductor is still the best play in artificial intelligence. Yes, it's a little more expensive than it was a year ago. And if the stock pulls back over the next year or two, I would be happy to buy more. But I just love the company's position, and it has fabrication facilities that no one else can match, at least today. So what do you think about Taiwan Semiconductor and its place in artificial intelligence? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.